Good morning, ladies and gentlemen. How are you all doing? Hope you had a great day yesterday, a great expiry session. As I had told you, be prepared to book some profits when Nifty goes up by 100, odd points, and exactly same thing happened. Nifty closed near its opening levels only. So, having said that, there are lots of things shaping up as I have been warning you. Now we are reaching a very crucial range. In today's session, markets have closed at the highest prices after the entire pandemic crash. So it's like the situation where markets are extremely bullish, point A, point two. It has become a kind of market where you buy anything, anywhere, and you make money. You make easy money. My friend, markets are not easy. Markets do not give you easy money. So the moment you start making easy money, be cautious. Take your precautions and be prepared. So anything, nothing to worry about here. Let me quickly share the data and I'll share the plans through which you can manage your positions. What all you should be expecting. What are the key numbers that to watch out for. So let's quickly jump onto the data. Number one, in yesterday's session, it was a good positive close all across the board. ITs and pharma did pretty well. Pharma closed about 2.5% positive. ITs about 3.2% positive. Nifty Bank closed about 1% positive. Nifty 50 closed about 0.82% positive. The only underperformers were FMCG, media, and energy. If you look at the fund flow, it's overall positive. The markets fell towards the end of the day. That's pretty much obvious looking at the fund flow data. Index options were bought about 1700 crores, so it must have been the written puts which were bought back which dragged the markets a little lower. Rest foreign institutions did buy in cash about 980 crores. The numbers of buying is not that much impressive. Point A. Domestic institutions have also bought surprisingly. Both FIIs and DIIs are net buyer in yesterday's session. On the other hand, FIIs did purchase about 1400 crores of index futures. On the other hand, they sold about 240 crores of stock futures, and stock options were sold about 48 crores. So this is the fund flow data, and one thing surprising, that's again VIX positive by 1.6%. Now, since last couple of sessions when markets are going up, VIX has been consistently rising. So this hints towards something is cooking up in the underlying, something is happening, which means it could be some protection buyings happening. Or because see, this particular rally that we have seen in last 7 to 8 days, that's a week time, this is the sharpest rallies that I have personally seen in at least an year or 2 years. So things are certainly not going to be easy here on. It's the month before US elections. Now if you look at the charts and the data, there are certain key things to watch out for. So let me just share with you the Nifty and Bank Nifty chart. First of all, this is the Nifty chart. If you look at the bottom, the square, green square at the bottom, that's the RSI indicator. It has touched the 60 line. Now, in case it goes above 60, it would be extremely bullish. In case it takes resistance on 60, it would be like, a range bound market. Now, if you look at the volume right above it, the volume bars, volumes have been consistent and little bit on the lower side. If you look at the previous volumes when markets were falling, they are very big bars. But again, if you look at the current volumes are little thinner. That's my concern. Rest, if you look at the rally, the green line that I have there on the chart, that's a very, very steep rally, and I'm sure you can see that you do not have any such rally in past for a long time. Now, one thing that also worries, that the size of the candles is very, very small. So buying is happening, a slow and gradual buying is happening, volatility is rising, the volumes are kind of shallow. So it is a positive market, but it indicates that you need to be planning yourself. Remember, if you don't sell on highs and buy on lows, how would you make money? Bullish market is good to sell, but it doesn't mean that you start short selling tomorrow onwards. You need to wait for the prices, the charts, the markets to confirm. At this point of time, just be ready to see any dynamics getting changed. Rest, this is again one more chart of Nifty. Now, one thing that I wanted to show here is the deviation from the 20 days moving average is almost 450 points. If you remember the day on 31st of August, I had told you that in case markets go up by 50, 100 points, start booking your profits, because that would be a deviation of over 500%. So that's where we have reached again. It's again a deviation of 450 points. So in case markets go up continuously, it would be something extremely deviated market, and I would not want to buy in a deviation. I would want to buy into a stability. Now stability would not only come if markets fall, it would also come in case it consolidates. So I would personally want to see a consolidation happening. Till then I would stick to options, no future buying. Rest 20 days moving average has taken support on 50 days moving average, and it has now a upward slope, so that's a positive thing. Now let's take a look on Bank Nifty chart. Now the Bank Nifty chart is a little more interesting. Number one, MACD has come above the zero line, as I had told you in yesterday's session. In case it goes above zero line, it would be pretty much positive, so that's perfectly fine. Now the 20 days moving average, the red line that you see along with the blue line, that has got an upward slope, so that's also positive. However, the candle of today, both in case of Nifty and Bank Nifty, this is in Bank Nifty, it's a kind of shooting star candle, and in Nifty, it's a kind of doji candle. So it does look that somewhere the bulls, the momentum of bulls is like kind of losing, not losing, at least diminishing, you can say. That momentum is somewhat fading up. So be precautious. Certain prices, the key prices to watch out for, as it was a shooting star in today's session. So the most important price would be today's low, that's around 23,060. Be very, very watchful for this particular level. In case it goes below this level, you can see a small dip or correction. Rest on the upside, 23,600 is going to be the immediate resistance. Above it, you would be headed toward 24,000 levels. Post that, we would have only one resistance. That's the 25,000, the highest prices that Nifty reached on 31st of August. So that's about Nifty and Bank Nifty. On the other indices front, as I said, in current market scenario, as it's extremely deviated, I would prefer trading with options instead of futures. So view is positive. Depending upon the market scenario, I would buy calls or puts depending upon how the market behaves, because today was a doji candle. So in case tomorrow markets are negative, I would prefer no trade, no short selling right now, unless and until we get any clear signs on charts that it's time to short sell. So far we have not got any clear signs of short selling, so let's just wait and watch. And in case markets stay positive in tomorrow's session, I would want to buy Nifty calls or Bank Nifty calls with the stop loss of yesterday's low. So that would be in Nifty around 20. In Nifty you can follow a stop loss 10,800, and in Bank Nifty you can follow a stop loss of 23,060. Metal index, it's showing signs of bullish reversals. In the last two sessions, it was a bearish momentum that was building up and metals were losing stem, but I had told you just to wait for some confirmation. So in today's session, it's a kind of in the body pattern that has formed. It's also called a harami pattern in technical analysis. So that's you need to wait and watch more, because metal sector is something that goes into correction first, comes out of correction first. It's a commodity driven index. That's the reason why the ups and downs are very, very choppy and very steep and sharp. So metal index, wait and watch, no trade. IT view is positive. Last session was a shooting star, so again avoid for now, no trades in IT. Pharma positive, fine buying opportunities. Energy index negative, no longs. Auto index is positive, however it's into resistance zones, so buy either on dips or in case index gives you a breakout above 8350. Now if I talk about the specific stock specific trade, so here is what I would want to do. As we already had good positions and we have ridden the rally of the markets, we have participated by HDFC Bank and all other stock that have really performed in the market. So I would suggest hold on to your position, book some profits, and just carry over your long positions. I would not recommend going long from here onwards unless and until we get any clear bullish closure. Rest, it will depend upon the real-time market scenario. So as of now, I'm not sharing any trade calls. I would suggest stick to index. That too through options. Any trade that you take it through options in current scenario. Do not bet on futures. That's my personal opinion. Rest trade with the in coordination with your risk manager and your financial advisor. So that would be all in today's trading session. Hope you got a clear idea how you need to be managing your portfolios. Your portfolio must be shining as of now, and in case it's not shining, there is some mistake that you have done while building up your portfolio. So I'm here to help you out with that. Anytime you feel the need, get back to me. And don't forget to like, share, and subscribe. So that would be all. Thank you so much. Abhishekraj signing off. Stay healthy, stay wealthy.